Hi friends, good evening. Welcome to YouTube session on Introduction to Ind AS. Yes, we know your FR subject in your CA final is all based on your Ind AS. In your intermediate, we learned accounting standard. In your CA final, the FR subject is fully based on Ind AS. So today, we are having this session to have this Introduction to Ind AS. Fully based on Ind AS. So today, just a minute. Okay, now this Ind AS, what we are learning over here, this is it applicable to all entities? That's the first question which comes in your mind. Whether it is applicable to all the entities. Second, sir, with Ind AS coming, whether AS are still valid or AS are now gone. What is it? So again, that's a question coming in your mind. All your questions which are there, like Ind AS applicable to whom, with the introduction of Ind AS, whether AS are still applicable or not, that all questions will be answered in this session. And this session will also give you a glimpse of how we teach at Unacademy. What is the kind of material which we provide to you? So you will also get a glimpse of our coaching. If you like our coaching, you can definitely subscribe to our Plus subscription on Unacademy platform. Okay, before I move ahead, let me just share with you one new feature which has came up in Unacademy. Unacademy has started with an iconic program. So at Unacademy, we have now two types of subscription. One is a plus subscription, other is an iconic subscription. Majority of the student had a complaint that, sir, Unacademy doesn't provide physical material. In your plus subscription, we give you material in soft copy, but not the physical material. Iconic program has it. You wanted physical material, we brought it in this iconic program. Majority student had a complaint, sir, our test papers are not evaluated. In your plus subscription, we used to give you a test paper, we used to give you the solution, but our evaluation was not done. The student had a complaint, sir, we want the evaluated answers. Iconic program has it. So you get your test papers evaluated under your iconic program. Many students had a complaint like, sir, we need a mentor kind of thing, someone who can push us, someone who can motivate us. So under your iconic program, we are providing you 1:1 mentor. So for every student, one mentor is assigned, and that mentor will always push you to bring you to a next level. So what are the benefits under your iconic program? Under your iconic program, we have evaluated test series, we have printed books, we have 1:1 doubt solving, we have basically your mentorship program for you. This all things are there together with the normal benefits of plus subscription. You can watch live lectures, recorded sessions, you can watch it unlimited times. Yes, if I'm not able to attend live, do I have the option to attend the recorded one? That is always there, unlimited viewing rights of recorded session. So together with all plus subscription benefit, extra benefit coming under your iconic. Now iconic ke fees. What are the charges for iconic subscription? CA Final Group 1, 4 papers together, 12-month subscription will cost you 28,500. Yeah, 12-month subscription for iconic. Physical book will come, test paper evaluation will be there, live lectures, unlimited viewing rights of recorded lectures, and 1:1 mentorship program, everything covered in that 28,500. You can use code Yeshas Live. With that Yeshas Live, you will get a 10% discount. Effectively, it will be around 2,100 or 2,200 rupees a month. Imagine 4 subjects of CA final, you are able to finish it in 1 year. Yes, easily able to finish it. And 2,100, 2,200 rupees a month, it's actually less than your articleship ka stipend also. So you are able to sponsor your studies through your stipend itself. It's actually a great deal. Physical material, everything will be covered in this iconic program. So that's about the iconic feature which has been launched lately. Now moving on to today's topic. Now let's move on to our today's topic. Our today's topic is Introduction to Ind AS. Introduction to Ind AS. Now few things which I wanted to tell you first. See, whenever I'm taking these lectures, I'll ask you lots and lots of questions. And mostly the answer to this question will be yes or no. Mostly the answer will be yes or no. So you can type in Y or N. I don't want your full answers, just simple Y or N you type it so that I'm able to understand that you are understanding the subject properly. So answers will be there, lots of question I'll ask, yes, no mein answer hoga, please make sure you type down that answers. Second, if you get any doubts, while I'm teaching this concept. If you're having any doubts, you can put it down in the chat box. Okay, the first of all, now tell me, are you able to listen to me properly? Am I audible, visible properly? Give me a thumbs up for it. Am I audible, visible properly? Give me thumbs up for it, all of you, please. Now, the material which appears to you, the material which is appearing on the screen, this is the material which will be given to you. The same material will be provided to you. If you choose an iconic one, you will get a physical book. If you are choosing a plus subscription, this material will be given to you on a soft copy basis. You can get it printed on your own. Now, same material is available to you. Now we are coming to the word Introduction to Ind AS. Introduction to Ind AS. Now tell me, Reliance Industries Limited, they started this Jio, Reliance Jio. They have this separate entity created for Jio. Are there any foreign investors? Are there any foreign investors who invested in this Jio business? Are there any foreign investors who have invested in this Jio business? Yes, sir. Facebook holds 9.99% in Jio business. Same way, Microsoft is also invested in Reliance Industries Limited, the Jio business. So can I say the international investors are also investing in Indian companies? Now, whenever international investors are investing in your companies, would they see your financial statements? Would they see your financial statement before investing? So definitely they'll see the financial statement. Now, my financial statements are prepared as per Indian laws. Do you think that accounting standards which are in India and accounting standards which are in US, UK, abroad, would they be same or different? Accounting standards which are there in India and accounting standards which are there in US, UK, would they be same or different? Sir, they will be definitely different. So, foreign investors are investing in Indian companies. Whenever they are investing in Indian companies, they see the financial statements. And see, whenever they want the financial statement, they will also try to want the financial statement as per their laws. The US wala banda doesn't know accounting standards of India, so they will always say, sir, give me financial statement as per US laws. UK person doesn't know accounting standards of India. He will say, sir, give me financial statement as per UK laws. So, wouldn't it be better if I have a common set of standards across the world? Wouldn't it be better if I have a common set of accounting standards across the world? Yes, sir, it will be definitely better. To have a common set of accounting standard across the world will always be beneficial. The foreign investors wants to invest in India or Indian investor wants to invest abroad. When I see their financials, I know these are prepared in the same way like we prepare ours. If it is prepared in a different way, I need to understand usme kya changes honge as per our laws and regulation. The UK people, when they invest in India, they need to understand if it was as per UK law, profit kitna hota. But if at all, imagine a global accounting standards are there. Similar accounting standard being followed world over, wouldn't it be beneficial for everyone? Yes. And for that purpose, we came out with Ind AS. So internationally, there is IFRS, International Financial Reporting Standard. Internationally, there is IFRS, International Financial Reporting Standard, and based on IFRS, we have came out with Ind AS. So our Ind AS are actually a replica of IFRS. Our Ind AS are actually a replica of IFRS, and that's why I say this is what is similar given in your IFRS. A replica of IFRS, you've done bit of modification as per Indian scenario. You can say 0.1% or 0.5% modification done to bring it to the Indian scenario. Otherwise, these are based on IFRS. Now, IFRS is currently valid in more than 140 countries. Imagine more than 140 countries following similar accounting standard. Ye ho gaya na? Globally, we are having a similar accounting standard. And that global similar accounting standard always helps in cross-border investing. So UK people wants to invest in India, they will see the financial statement. If the financial statement are as per the common accounting standard, they are very happy with financials. But if they are not as per the common accounting standard, they will tell that entity to prepare one more set of financial which will be as per UK laws. So in order to promote global accounting standard, IFRS were introduced, International Financial Reporting Standard. It's a London-based group, they came out with this IFRS. And so we are also, ICI is also a member of that London-based group. So we have adopted, we have basically come up with our set of standards which are similar to IFRS. We don't call it as adopted, we call it as conversions. Adoption is whatever they have, we follow that. Conversions means we come up with our set of standards which are based on IFRS. What do you mean by the word Ind AS? Ind AS are nothing but IFRS converged standards. So these are based on IFRS, bit modification we have done as per our Indian scenario. And I told you again, the material which is appearing on screen, this is the material which we issue to you whenever you take up our subscription. Okay, let's start. We start with, first of all, your introduction. Why do we need a global standard? Why do we need a global standard? You see, companies have started raising funds from all across the world. In your Reliance, Facebook has invested, Microsoft has invested in this geo business. So they have started raising money from all across the world. Every country has their own set of rules, regulation for accounting. International analysts and investors, they want to compare the financial statement on a similar accounting standard. Imagine I'm in UK and I want to invest in your company. So if your accounts are prepared on different basis, my accounts are on different basis, they aren't comparable. If I want to compare your accounts with similar my industry ki company, it has to be on a common set of accounting standard. The international analyst investor would like to compare financial statement based on a similar accounting standard. And having multiple accounting standard is against the public interest. If you have a same accounting standard followed everywhere, it will be good. So global standard facilitate cross-border flow of money. Yeah, if Reliance Industries is also following the same standards which are being followed in UK people can compare Reliance ke financials with some other company which is in UK in a competing business. And if they feel Reliance is undervalued, they can invest in Reliance. The cross-border flow of money. Nowadays, entities from different countries have started investing here. So Reliance ke andar, Facebook invested, Microsoft invested. It's always better to have a global accounting standard. And to come up with this concept, IFRS were introduced. Now, sir, who introduced IFRS? Did ICAI introduce IFRS? Yes or no? Did ICAI introduce IFRS? Yes or no? No, sir, IFRS are not introduced by ICAI. ICAI came up with this Ind AS. So who introduced IFRS? Now, internationally, there is International Accounting Standard Board, IASB. Internationally, there is International Accounting Standard Board, IASB. IASB is basically created by a London-based group. So there is International Accounting Standard Board. They came out with IFRS. There's a London-based group. Earlier it was IASC, International Accounting Standard Committee. Presently it is known as International Accounting Standard Board, IASB. So IASB was formed to come out with a global accounting standard, to come out with a uniform accounting standard which will be followed by everyone. So IASC, earlier it was IASC, now it's IASB. It was basically established to formulate and publish international accounting standard. The purpose was to create some international accounting standard, and this was basically established in 1973. And between 1973 to 2001, they issued international accounting standards. Okay, what did they issue? International accounting standard. Okay, so pay attention please. There is an organization called IASC, International Accounting Standard Committee. Now it is called as IASB, International Accounting Standard Board. What was the purpose of that organization? To issue high quality international accounting standards. Okay, between 1973 to 2001, the IASC came up with International Accounting Standard. They were called IAS. क्या बोलते थे उसको? IAS, International Accounting Standard. Now, between 1997 and 99, the IASC restructured their organization and now they are called as IASB. Earlier it was IASC, they came out with International Accounting Standards. IASC is restructured, now known as IASB. IASC is restructured, now known as IASB, and IASB issued some additional standards. Pay attention, IASB issued some additional standards after 2001 which are called IFRS. Subsequently, IASB issued some additional standard. They issued some additional standard which are called IFRS. Okay, so imagine earlier it was IASC, International Accounting Standard Committee. They came out with International Accounting Standard, IAS. Okay, later on IASC was restructured and now they formed as IASB. IASB came out with some additional standards which are called IFRS. I have a question for you. With introduction of IFRS, whether IAS which were issued earlier, are they gone or are they still there? Are they gone or are they still there? If you feel it's gone, write down G. If you feel they're still there, write down S. So with the introduction of IFRS, earlier there were IAS, International Accounting Standard. Are they gone or are they still there? Gone or still there? Still there. Yes, Dikshit, correct. So International Accounting Standards are still there. Introduction of IFRS. IFRS are additional standards which came up. Earlier there was IASC. IASC came out with International Accounting Standard, IAS. IASC is restructured. Now they formed IASB. IASB came out with some additional standards which are called IFRS. Okay, if you see over here, however, IASB has not rejected the standards issued by IASC and they continue to be designated as IAS, International Accounting Standard. If I want to understand today, International Accounting Standard issued by IASC, they are still there, and International Financial Reporting Standard issued by IASB, they are also there. So IAS are also there, IFRS are also there, and when I use the word IFRS today, it includes the IAS issued by IASC. When I use the word IFRS today, IFRS includes not only the IFRS issued by IASB, but also includes your IAS, International Accounting Standard, issued by IASC. They are also included in the term IFRS. Okay, to check over here, the word IFRS, when I use the word IFRS, what does it comprise? The word IFRS comprises IFRS issued by IASB, IAS issued by IASC. It includes the word IFRS, International Financial Reporting Standard, issued by International Accounting Standard Board. It also includes International Accounting Standards issued by International Accounting Standard Committee. And now, in your UK, under your IFRS and IAS, whenever your standard was bit ambiguous, they used to come out with some interpretations. There was interpretations issued by IASC, that is called SIC, Standard Interpretation Committee, and there were some interpretations issued by IASB. Interpretations are also included in the word IFRS. Okay, so with IFRS coming, earlier IAS were there, they are not gone. IFRS are some additional standards. IAS are still there. So whenever we use the word IFRS, IFRS includes your IFRS as well as the IAS. The UK may, it's not just IFRS, IFRS BA, IAS BA. And when I use IFRS, it's combo. IFRS includes IFRS and IAS plus the interpretations issued for IAS, interpretations issued for IFRS. Did you understood this? Yes or no? Just write down Y or N. I told you I'll ask you lots and lots of questions and answer should be very brief, yes, no. And please make sure you reply. If you reply, you're going to enjoy the sessions. Now, this IFRS, are they rule-based or principle-based? This IFRS, are they rule-based or principle-based? IFRS are principle-based. They outline a certain principle and you need to apply that principle based on facts and circumstances. They're not rule-based. See, USK standard. IFRS is UK related. USK standard, they are more rule based. UK is more of principle based. They outline some principle and based on the principle, the accounting will be there. So IFRS are considered as principle based standard. They establish broad rules rather than dictating a specific treatment. They don't tell you this is to be done. You have to see the facts and circumstances, then apply the treatment. Okay, I give you a simpler example. Now, when do I say entity is my subsidiary? When do I say entity is my subsidiary? Now, normally you say when I hold more than 50%. When do I say entity is my subsidiary? Normally we say when we hold more than 50%, it's my subsidiary. But I tell you, under your IFRS, they don't use the word 50%. They don't use the word 50%. They say that you should have a power over investee. You should have a power over investee. You should be able to govern their policies unilaterally, not necessarily holding 50%. Even with less than 50% holding, the other entity can be your subsidiary. So IFRS are principle based. They outline a principle. They don't give you the specific treatment. You need to apply based on facts and circumstances. Now I give you a simple example. Imagine there's a company you hold 45%. There's a company you hold 45%. Okay, so sir, not 50. Okay, if I hold more than 50, generally I say I have a control, it's my subsidiary. Generally, IFRS doesn't go like that. I hold 45% in a company, other 55% are held by very small shareholders, which are thousands in number. Okay, I hold 45%, other 55 is held by thousands of small shareholder. Now tell me, whether the thousands of small shareholder would come and attend the general meeting? Yes, no. Whether the thousands of small shareholders, would they come and attend the general meeting? Yes or no? So mostly no. So the thousands of shareholders will not be coming and attending the general meeting. So in a general meeting where decisions are to be taken, the shareholders who are present, they hold total in aggregate around 60-70%. The shareholders who are present, they hold in aggregate 60-70%. Amongst them, I am also there and I hold 45%. Now tell me, who will vote at the meeting? Sir, who are present. Those who are present, they hold in aggregate 60-70%. In that 60-70%, I am holding 45. Okay, so question. Would I be able to take the decision whichever I want? I hold 45, other 55 is with thousands of small shareholders. They don't come and attend the meeting. In a meeting, total shareholders who are attending is almost holding 60-70%. Last 10 year ka ratio dekh lo. 60-70% holding wale people, they attend. Out of that 60-70%, I am holding 45. Would I be able to take the decision which I want? Yes, no. Sir, yes. Because 60 may say I hold 45%. Oh, I am holding 75%. I hold more than 50% out of those who are present. Imagine with 45% holding, I am able to take the decision whichever I want. With 45% holding, you have a control. So Ind AS or IFRS, our Ind AS are based on IFRS. IFRS are principle based. So sometimes with 45% holding, I may have a control. Sometimes with 45% holding, I may not have a control. For example, another one. I hold 45, another 55% is with two shareholder. They hold 27.5, 27.5. I hold 45. There are two other shareholder. They hold 27.5, 27.5. Now question, can that other two shareholder come in a meeting and vote against me? Can that other two shareholders come in a meeting and vote against me? Yes, sir, they can come in a meeting, they can vote against me. That's possible. The other two shareholders can come in a meeting, they can vote against me. So can I say in that case, with 45%, I cannot take the decision which I want? Okay, the first case mein with 45%, I was able to take a decision which I want. But under the second case, with this 45%, I'm not able to take the decision which I want. The first case with 45%, I have a control. But second case with 45%, I don't have a control. So evaluate the principles based on facts and circumstances. I hope you're clear with this. So IFRS are principle based. And every major nation is moving towards IFRS. Every major nation is moving towards IFRS. In order to have a global accounting standard, IFRS were introduced. ICAI has also kind of came up with a similar set of standards which are based on IFRS. Let us go down. How do I become IFRS compliant? How do I become an IFRS compliant? Either you start adopting IFRS, you follow IFRS, that's called adoption, or you converge to IFRS. What is convergence? Adoption means you follow IFRS. Conversion means you come out with your own set of standards which are based on IFRS, but you make bit of changes. As per your scenario. So there are two options possible. Either by adoption or by conversions. Either by adoption, you adopt IFRS, follow IFRS, or you converge to IFRS. Conversions means you come up with your set of standards which are based on IFRS. Okay, adoption would mean you follow IFRS. Conversion means you develop high quality standard which are compatible with IFRS. Okay, I have a question. What did India do? What did India do? Did we adopt IFRS or did we converge to IFRS? What did our country do? Did we adopt IFRS or did we converge to IFRS? I want answers from you. If you want your answer is adopt, write down A. If your answer is converge, write down C. Don't write full thing, but at least one letter you can write. So sir, we did not adopt it, we converged to IFRS. We came out with our own standards which are based on IFRS. Sir, which is our own standard? Ind AS. We came out with Ind AS which is based on IFRS. Okay, so now if you just see over here, your Ind AS are almost similar to IFRS, but few changes are made to make them suitable for Indian environment. So simple words, we have gone for conversions. Simple words, we have gone for conversions. What are Ind AS? Check what is Ind AS. Ind AS are IFRS converge standard. Ind AS are IFRS converge standard issued by Central Government of India under the supervision and control of Accounting Standard Board of ICAI in consultation with NAFRA. Okay, so Ind AS are IFRS converge standard issued by central government in consultation with NAFRA. So Ind AS are IFRS converge standard based on IFRS issued by whom? Central government in consultation with NAFRA, but under the supervision and control of Accounting Standard Board of ICAI. Okay, let's move it. Now, if you see the names and numbers of Ind AS, if you see names and numbers of Ind AS, they're similar to IFRS. Now tell me practically, do we have only IFRS or do we also have IAS? Practically, do we have only IFRS or do we also have IAS? Only IFRS or also IAS or both? There are IAS IAS 1 to 41 are there. IAS 1 to 41 are there, and there is IFRS 101 to 116. IFRS 117 is under preparation. So internationally, we have IAS 1 to 41, IFRS 101 to 116. Now, India mein, we don't have two names. We are not having two names like Ind AS, IAS and IFRS. हमारे दो नाम नहीं है. We don't have two names. We have only one name. Which is that one name we have? Sir, Ind AS. Which is that one name we have? Ind AS. So in India, we have Ind AS 1 to 41. Okay, so for this, we have Ind AS 1 to 41. IAS 1 to 41. India mein Ind AS 1 to 41. Same name. And for IFRS, I don't have another name. I have this Ind AS only. But now what do I do? What do I do? Okay, just pay attention. There's one small change. This is actually IFRS 1 to 16. IFRS 1 to 16. India mein, I can't have Ind AS 1 to 16. If I put Ind AS 1 to 16, duplication ho jayega. So IAS 1 to 41, IFRS 1 to 16. That's internationally. IAS 1 to 41, IFRS 1 to 16. That's internationally. India mein, we don't have these two names. Instead of two names, we are having only Ind AS. So IAS 1 to 16 is Ind AS 1 to 16. IFRS 1 to 16. IFRS 1 to 16 is Ind AS 101 to Ind AS 116. It's Ind AS 101 to Ind AS 116. This is IFRS 1 to 16. So IAS 1 to 41 is Ind AS 1 to 41. IFRS 1 to 16 is Ind AS 101 to 116. So just see, we have the similar number and the names are also same. Like internationally, IAS 16. Internationally, IAS 16 is PPE. We also have Ind AS 16 PPE. Unka jo IAS number hai, same we have Ind AS number. So coming back over here, your Ind AS are named and numbered in the same way as IFRS. They are named and numbered in the same way as IFRS. So IAS 1 to 41 is Ind AS 1 to 41. IFRS 1 to 16 is Ind AS 101 to 116. IFRS 1 to 16 is Ind AS 101 to 116. IAS 1 to 41 is Ind AS 1 to 41. Sir, for IFRS 1 to 16, I cannot have Ind AS 1 to 16 because Ind AS 1 to 16 is already allocated. वहां पे IAS था, IFRS था, यहाँ पे both are Ind AS. तो for IAS 1 to 41, it's Ind AS 1 to 41. For IFRS 1 to 16, we have Ind AS 101 to 116. Now, in your IFRS, if they have some ambiguity in standard, they came out with interpretations. In your IFRS, if they have some ambiguity, they came out with interpretations. India mein, we don't have interpretations. Oh, sir, we don't have interpretations. No. Instead of interpretations, we have appendix. Instead of interpretations, what do we have? Appendix. So IAS or IFRS interpretations are not there in Ind AS. They are covered as a part of appendix to the standard. They are as a part of appendix to the standard. Okay. Now, there's a word called carve in, carve out. There's a word called carve in, carve out. Sir, what's the meaning of this carve in, carve out? Okay, did we adopt IFRS? No. We converge to IFRS. What is conversions? We come out with our own set of standards which are based on IFRS. We come out with our own set of standards which are based on IFRS. So we are coming up with our own set of standards which are based on IFRS. So question, would we make any changes which are relevant for Indian scenario? Would we make any changes which are relevant for Indian scenario? Yes, no. Keep replying, keep yourself active. If you are active, you enjoy the classes. So would we make any changes which are relevant to Indian scenario? Definitely yes. Definitely yes. So now pay attention. Pay attention. What is carve out? What is carve out? Something which is there. something which is there in IFRS but we changed it, उसको बोलते हैं carve out. Something which is there in IFRS but we changed it, we are not following that treatment, we follow a different treatment. That's carve out. Carve in, what is carve in? Something which is not there in IFRS, we added. Something which is not there in IFRS, we added. That is called as carve in. So carve in, carve out, two words are there. Just write down at the top. What do you mean by the word carve out? What do you mean by the word carve out? Something which is there in IFRS but modified or changed under Ind AS. They have something, we follow a different treatment. That's carve out. Carve in किसको बोलेंगे? Carve in, something which is not there in IFRS. They don't have it. But included under Ind AS. We have it. That is called carve in. Okay. We have not adopted IFRS, we have converged to IFRS. Conversion means we have set up our own standard which are based on IFRS. We have set up our own standards which are based on IFRS, but we have done bit of modification. Some treatment what was there, we changed it, that's carve out. Something which was not there in IFRS, we added, that's carve in. So tha usko change kiya, that's carve out, and which was not there, we added, that's carve in. Did you understood the word carve in, carve out? Did you understood the word carve in, carve out? Okay, now pay attention. Suppose there were two options under IFRS. There were two options under IFRS and I removed one option. There were two options under IFRS, I removed one option. Can I say still I am following the treatment given under IFRS? दो में से I have removed one option. So IFRS allowed two options, Ind AS mein we removed one option, still the one which is followed is what is as per IFRS. So that is not called carve out. Carve out is they follow something, we changed it. If they give two options, we eliminate one option, that is not carve out. Okay, so pay attention. While formulating your Ind AS, efforts have been made to keep the standard in line with your IFRS or IAS. Departures are done whenever we found it necessary. And we have the following changes. Some terminology changes are done. Like for example, we use the word balance sheet. वहाँ पे they use the word statement of financial position. We use the word balance sheet, they use the word statement of financial position. So some terminology changes. Second, we have removed option. They gave some two option, we have removed one option. Removal of option is not carve out. Removal of option is not carve out. Reason, still what we follow is what is given in IFRS only. They had two options, we removed one, but still what we are following is what they have given. So that is not carve out. Third, certain changes have been made considering the economic environment of our country, and they are generally known as carve outs. Certain changes are made considering the economic environment of our country and they are known as carve out. And some additional guidance we have. Under Ind AS which is not there in IFRS. जो IFRS में नहीं है, we have added. That's called carve in. These are few changes which has been done. Okay, so we understood. Internationally, IASC, International Accounting Standard Committee was formed. They came out with IAS. IASC was restructured. Now it is known as IASB. They came out with some further standards which are called IFRS. The word IFRS includes IAS, as well as the IFRS. So internationally, IFRS are there. They are basically to have a world over global accounting standard, and ICAI has converged to IFRS. Converge means we came out with our own standard which are based on IFRS, and modification is done whichever is required as per the Indian scenario. Now, sir, how Ind AS are to be applied, to which entity it applies? The roadmap. So now going to roadmap for implementation of Ind AS. For companies other than bank, financial institution, other than bank, NBFC, other than bank, NBFC's insurance company, other than bank. Okay, so this is for a normal company. For a normal company, Ind AS कब से start होंगे? Okay, phase 1. Phase 1 is 1/4/15 or thereafter. It was on voluntary basis. So voluntarily any company can start adopting Ind AS 1/4/15 or thereafter. Now 16 say it started mandatory basis. 1/4/16 onwards it's mandatory. 1/4/16 onwards now it's mandatory basis से 15 में voluntary था. 1/4/16 onwards 16-17 financials. तब से ये mandatory हुआ किसके लिए? For whom mandatory? Listed, unlisted, having a net worth 500 crores or more. Listed company having net worth 500 crore or more. Unlisted company having net worth 500 crore or more. So listed, unlisted, having a net worth 500 crore or more, to them it started applying from 1/4/16 onwards. And if it applies to you, it will also be applicable to your parent, your subsidiary, your associate, your joint venture. If it applies to you, it's applicable to your parent, your subsidiary, your associate, your joint venture. The parent, subsidiary, associate, joint venture of above. Okay, so 1/4/16 onwards it became mandatory. किसके लिए? 1/4/16 onwards it became mandatory for whom? Listed company having a net worth 500 crores or more. Unlisted company having a net worth 500 crores or more. The simple words, all companies having net worth 500 crores or more. And if it applies to you, it is also applicable to your parent, your subsidiary, your associate, your JV. Okay, I'll come to this again. I'll come to this point again. C point, I'll come back to this again. Okay, this was 1/4/16 say. Now, phase 2 is 1/4/17. 1/4/17, it's mandatory for all listed. All listed companies are required to follow Ind AS from 1/4/17 onwards, mandatory. 16 onward, listed having a net worth 500 crores or more. 1/4/17 say all listed. And unlisted having a net worth 250 crores or more. So listed all, unlisted, net worth 250 crores or more, they are required to follow Ind AS mandatorily. And again, parent, subsidiary, associates of above. Okay, if I talk about today's situation, today Ind AS is applicable to whom? This is 21 going on. Today Ind AS is applicable to whom? All listed, all. If it's a listed, don't see the net worth. All listed company, unlisted company having a net worth 250 crores or more. All listed and unlisted company having a net worth 250 crores or more. Plus, if it applies to you, it is also applicable to your parent, your subsidiary, your associate, your JV. Your parent, your subsidiary, your associates, your JV, joint venture. Okay, now we have some questions over here. Yamini has a question, sir. If securities are listed on SME, small and medium enterprise, the exchange, the SME exchange, if it is listed, whether Ind AS applicable? Answer is no. Just come back. यहाँ पे clearly written, other than companies listed on SME exchange. If at all you are listed on SME exchange, small and medium enterprise exchange, वहाँ पे listed हो, it is not applicable to you. That's one. There's one more question from Yamini, sir. What about listed on institutional trading platform? If you are listed on institutional trading platform, then you are covered under Ind AS. So listed in India or abroad, listed in India or abroad, and whether you are listed or whether you are in process of listing. Now, sir, what is in process of listing? You filed a DRHP, draft red herring prospectus. You filed a DRHP with SEBI. If you filed a DRHP with SEBI, you are said to be in process of listing. In process of listing means filed DRHP with SEBI. तो या तो listed हो या in process of listing, या तो listed या in process of listing, then you are basically mandatorily required to follow your Ind AS. तो listed, to be listed companies, उनके लिए it is mandatory. Unlisted के लिए net worth 250 crores or more. This is the deadline which is now currently being followed. Any doubts? Anybody with this? Any doubts? Anybody with this? Okay, the now question. There's an unlisted company. There's an unlisted company, net worth less than 250 crore. There's an unlisted company, net worth less than 250 crore. Whether they will follow Ind AS. There's an unlisted company, net worth less than 250 crore. Whether they will follow Ind AS. No, sir, they will not follow Ind AS. So, sir, what will they follow? They will continue to follow the accounting standards which are there. The companies not covered above. Companies not covered above shall continue to follow the existing accounting standards. Oh, so sir, existing accounting standards are still there. Yes. Yes. Existing accounting standards are still there and they will remain. So both AS and Ind AS are prevalent in India. Both AS and Ind AS are prevalent in India and will remain as well. So don't think that with Ind AS coming, AS are gone. No, AS are not gone. So unlisted company, net worth less than 250 crore, they are still under your AS. Ind AS is for all listed, and unlisted having a net worth 250 crores over. It's a net worth, not the turnover. It's for big companies. Ind AS is coming up. Okay, if you are listed on SME exchange, you don't have to follow Ind AS. If you are listed on SME exchange, you don't have to follow the Ind AS. Okay, now question. Sir, can I follow AS for my individual financial statement and Ind AS for my consolidated financial statement? Can I do like that? For individual financial statement, I follow AS. For consolidated financial statement, I follow Ind AS. Is it allowed? No. No. It is applicable for both consolidated as well as the individual financial statement. Okay, Arshad, this lecture is in English, so probably if you want the lecture in Hindi, this won't be possible because this lecture is scheduled to be taken in English. But I bet and say you will be able to understand English. See, you might have a problem in speaking English, but understanding pakka will be there. I will suggest you watch the lectures, 100% you'll be comfortable with it. Now, I have one question. Imagine, they say that if at all you are an unlisted company, net worth 250 crores or more, your unlisted company, net worth 250 crore or more, Ind AS is applicable. Now, my net worth was 250 crore or more, Ind AS applicable, but now my net worth has gone down. Now my net worth has gone down. Would Ind AS still be applicable to me? Earlier, my net worth was 250 crores or above, Ind AS was applicable. Now my net worth has gone down. Would Ind AS still apply to me? Yes. Once Ind AS is applicable, it is lifetime applicable. Once Ind AS is applicable, it is lifetime applicable. So check over here, Ind AS once applicable will be applicable lifetime, even if you had followed it voluntarily. Even if you had followed it voluntarily, it will be applicable for lifetime. Now, whenever I switch over to Ind AS, if you just recall your financial statements, in your balance sheet, you have current year figure, your previous year figure. In your balance sheet, your current year figure, your previous year figure. Similarly, in your P&L, current year, previous year. Okay, so now, if Ind AS is applicable to me from 1/4/16 onwards, okay, 1/4/16, it was applicable to companies having net worth 500 crores or more. Imagine Ind AS applicable to me 1/4/16 onwards. So when I have a financial statement of 16/17, this year is Ind AS, where the previous year column will be as per AS or Ind AS? So Ind AS started applying from 1/4/16 onwards, 16/17. This year column is as per Ind AS. Previous year figure, would it be as per AS or Ind AS? Previous year column, would it be as per AS or Ind AS? Okay, previous year also has to be as per Ind AS. So simple words may, if Ind AS is applicable to you 1/4/16 onwards, effectively I have to give previous year figures also as per Ind AS. So effectively it gets applicable from 1/4/15 only. So if at all for you it is applicable from 1/4/16 onwards, effectively it will be applicable from 1/4/15 only. Reason, the previous year's figures should also be as per Ind AS. So check out the comparative information. Comparative information for minimum 1 year should be there. So if at all you are covered under mandatory phase from, for example, you are covered under mandatory phase from 1/4/16 onwards, effectively it will be applicable to you from 1/4/15 only. Effectively it will be applicable to you from 1/4/15 only. Acha. Now, if Ind AS is applicable to you, it will also be applicable to your parent, to your subsidiary, to your associate, to your JV. If Ind AS is applicable to you, it will be applicable to your parent, your subsidiary, your associate, your JV. Yes or no? Now, I just come to one question. Come to this question number 4. I just come to one question, then I'll again go back to theory. Come to question number 4. Okay, one, there is P Limited. That's a main parent. It has a subsidiary A, subsidiary B, and associate or JV C. So P has subsidiary A, subsidiary B, associate or JV C Limited. Okay, A, subsidiary has a further subsidiary X, and subsidiary has a associate JV Y, and B has a subsidiary Z. Did you understood the table? This is the ultimate parent. They have this subsidiaries associate JV. Ultimate parent has this subsidiary associate JV. Now this is one of the subsidiary. That subsidiary has a subsidiary or associate. Now, if I tell you, out of all these entities, one which is listed or one which has a net worth 250 crore or more is only A. One which is listed or one which has a net worth 250 crore or more is only A. If you just see over here, they've given out of above structure only A Limited meets the Ind AS applicability criteria. Okay, which is the company meeting the Ind AS applicability criteria? A. So can I say A is fulfilling the criteria, so Ind AS applies to A? Can I say A fulfills the criteria, Ind AS applies to A? Now, if it applies to you, it will also apply to whom? A fulfills the criteria, it's applicable to A. If it applies to you, it will also apply to your parent, your subsidiary, your associates JV. Your parent, your subsidiary, your associates and JV. Who is the parent of A? If Ind AS applies to you, it will be applicable to your parent. Who is your parent? P. Who is your parent? P. Okay, who is your subsidiary? X. Who is your associate? JV? Y. If it applies to A, it will also apply to A's parent, A's subsidiary, A's associate and JV. Now question arose, is it applicable to this other subsidiaries associate JV of P? Is it applicable to other subsidiary associate JV of P? This is the question. I understood A fulfills criteria, it's applicable to A. Fulfills criteria, it's applicable to A. If it's applicable to A, it's applicable to parent of A, subsidiary of A, associate JV of A. Now question is, So it will apply to P, X, Y. Would it apply to B, C and Z also? Yamini, Dikshita, would it apply to B, C, Z also? Yes or no? Socho, socho. Now, if I just go by the wordings written, it says parent, subsidiary, associate of above. Parent, subsidiary, associate of above. Above means those who are listed or those who fulfill the net worth criteria. Now tell me, who is listed or who fulfills the net worth criteria? Who is listed or who fulfills the net worth criteria? Sir, A is listed or A fulfills the net worth criteria. So it will be applicable to A's parent, A's subsidiary, A's associate, A's JV. Now, whether it is applicable to your parent's subsidiary associate JV or your subsidiary का associate subsidiary JV, उनको applicable है या नहीं? Now, if I go by the wordings written, it is not applicable to B, C, Z. If I go by the wordings given, it is not applicable to B, C, Z. But now, if P को Ind AS applicable, P will prepare financial statement as per Ind AS. And when Ind AS is applicable, your CFS, SFS, both are as per Ind AS. So individual financial and your consolidated financial also as per Ind AS. So if it is applicable to P, P will prepare financial as per Ind AS. P will prepare financial as per Ind AS. So if B, C and Z, if B, C, Z, they prepare as per AS, it will be difficulty in consolidation. When I consolidate, the accounts has to be based on similar policy. Parent, subsidiary has to follow a similar policy. If Ind AS applies to P, better B, C and Z, subsidiary, associate, JV of P, they should also follow Ind AS. Why? It will be better for consolidation. So if they are following AS for SFS purpose, for CFS purpose, they need to prepare one more set of financial statement which will be based on Ind AS. So question over here was, A fulfills the criteria. Who is fulfilling the criteria? A fulfills the criteria, so it's applicable to A, parent of A, subsidiary of A, associate JV of A. What about these other entities? To other entities, as per the definition, it's not applicable. But as P follows Ind AS, if P follows Ind AS, P ka subsidiary, associate, JV, if they don't follow Ind AS, it will be difficulty in consolidation. So it is better that B, C and Z should also follow Ind AS voluntarily. Did you understood this? Better that B, C and Z should follow Ind AS voluntarily, because otherwise they need to maintain two set of books. SFS के लिए they can follow it, but for the purpose of consolidation they need to give figures as per Ind AS to the parent. So check the solution given. Check the solution given over here. See, with regards to other subsidiary, associate, JV of P, with regards to other subsidiary, associate, JV of P, one view is, since parent is covered by Ind AS, they should also follow Ind AS. This will facilitate preparation of CFS. This will facilitate preparation of CFS. However, second view, the roadmap. What does roadmap say? If Ind AS applies to you, your parent, your subsidiary, your associate JV, it's applicable to A ka parent, A's subsidiary, A's associate JV. They only are required. Only your parent, your subsidiary, your associate JV are required. So based on this, it is not mandatory for B Limited, C Limited, Z Limited to follow Ind AS. Based on this, it's not mandatory for B, C, Z to follow Ind AS. So as P will be following Ind AS, CFS should be as per Ind AS. BCZ may not follow Ind AS for separate financials, but for the purpose of consolidation, they will need to give the figure as per Ind AS. So better BC and Z should also follow Ind AS voluntarily, because when they have to give figure to P, it has to be as per Ind AS. Did you understood this? Did you understood this? Okay. So this is bit glance. This is bit glance about how the material is given to you and how do we teach at Unacademy. This was just a demo session to make you understand about our style of teaching, to make you understand about the coverage, what we do, to make you understand about how do we give the material. For more such free lectures, you can come to Unacademy's app. We have lots and lots of free lecture over there. In Unacademy app, the lectures are divided as special class plus class. Special classes are all free. Special classes are all free. You can unlock the special class, the free class, by using code Yeshas Live or the code Yeshas. Any code you use, Yeshas Live or Yeshas, any code you're using, you're able to access all the special classes. For plus classes, you need to take a subscription. Subscriptions are divided in two parts: your plus subscription, iconic subscription. Iconic mein you get a physical material, evaluation of your test series, and a mentor as well. So this was just a demo session helping you understand the topic. Full sessions related to this are covered in Unacademy app. I hope you are comfortable with the lecture, you are comfortable with the delivery. Any questions you have from your side, tell me. The session was scheduled till 10:15, 1 hour ka session tha, so I'm not moving ahead. If you want to see this full session, it's there in special class under Unacademy app. That's also a free session. You can watch over there fully. Any doubts? Anybody with today's work? If you like our lectures, please come to Unacademy, and all free lectures you can watch it. Lots and lots of free lectures are there. Revisions are also there for free. That is also there. And a normal batch, if you want to attend, you need to take up a plus subscription. Thank you. So we keep it up till here, and I just tell you one sentence. Success is not by doing great things. Success is not by doing great things. It's just by doing small things with great discipline. What is giving you success is just that small things which you do with a great discipline. We all think we need to do something big. Big nahi karna yaar. Just choti cheeze, small things, you do it, that adds up and makes it a success. So for your CA final, just ensure you give your proper time to your studies. You complete all your coaching on timely basis. Last 5 to 6 months has to be for your self preparation. All coaching should be completed at least 5 months before your CA final examination. See you all on Unacademy app, and any issues you have, you can write it in the chat box. Bye bye. Take care.